You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
So next on the agenda for today is the exchange updates. Each exchange group will have a few minutes to give a brief overview of what they did last year and what we should expect from them next year. So we're going to do the exchange updates in alphabetical order, so please welcome Patty Schuler from Box.
Thanks, Bill. Good afternoon, everyone, and welcome. I just want to give a brief recap of what Box has done over the past year since I was up here a year ago and some of our upcoming changes. In September, we established a quality market maker allocation in the price improvement period auction. With the quality market maker allocation, market makers quoting at a price that is equal to the NBBO on the opposite side of the market from the PIP order at the time of initiation of the PIP auction will have priority up to their quote size after the public customer allocation. In January, we released the solicitation auction mechanism to execute block size complex orders at a net price. Earlier this year, we started a network infrastructure upgrade project. Participants will not be required to perform any system changes, as this upgrade is planned to be entirely seamless. These network upgrades are expected to be completed sometime in June. We are also in the middle of a hardware and software refresh, allowing for increased optimization of throughput, lower latency, and reduced burst activity. These upgrades are expected to be completed later this year. In February, we introduced a new alphabetical symbol distribution structure for our high-speed vendor feed and trading engine slice configuration, allowing for increased optimization. Some of the upcoming changes that we have planned are recently, we filed to expand the execution range for a customer cross order. Under the proposed change, a customer cross order will automatically execute if the execution price is at or between the best bid and offer on Box, provided that it is not at the same price as a public customer order on the Box book. The requirement that the customer order not trade through MBBO will remain the same. This change, pending regulatory approval, will be implemented in late Q2. We are also pleased to announce, pending regulatory approval, enhancements to trading complex orders on Box. New execution protections reject complex orders with a net debit credit price on a strategy identified as a net credit debit strategy. A second layer of protection is performed after this check for complex orders that have a quantifiable maximum price value by comparing the limit price or the execution price for market orders against the maximum price value. We are also updating the permissible range for complex orders. Currently, complex orders on Box are protected at NBBO. We're going to expand that range to have complex orders validated against an extended price range based on the NBBO of the individual legs of the complex order. These changes will be released in late Q2. We will also be adding the QCC order type late in Q2, pending regulatory approval. So lots of pending regulatory approvals that we are waiting on at Box. The most significant being is the launch of our open outcry trading floor, where I stood up here a year ago and announced this would be coming. In anticipation of the launch, we have made available in our test environment the new qualified open outcry order type. We continue to work on this initiative and look forward to getting approval soon. With that, I would like to thank you and introduce Bill Looney from CBOE.
Thanks very much, Patty. Good afternoon, everyone. My compliments to OIC for choosing a spectacular location for this year's conference. I'm glad to be here representing the CBOE, and of course that includes my colleagues now from BATS. This is an exciting time for our company as we embark on a new era after completing our acquisition of BATS Global Markets in February of this year. By bringing together two dynamic, innovative market leaders, the CBOE is now one of the world's largest exchange operators, and on March 1st, we were added to the S&P 500 index. Shifting to the product line, first of all, the deal has significantly expanded and diversified CBOE's product lines into new asset classes and geographies. This is attracting new users to our marketplace, and it's enabling us to efficiently provide packaged offerings, particularly for our large customers. By joining forces with BATS, the CBOE has significantly grown our customer base, which we are now integrating our global sales force to efficiently reach more customers. BATS brings a great physical presence in New York and Europe, and that provides us with boots on the ground to go out and meet our customers in those key areas and marketplaces. The CBOE also brings robust marketing and education efforts. Offering the combined company, we are now incorporating BATS products and markets into our customer-facing efforts. We are expanding the CBOE Options Institute curriculum to include educational content on BATS products while expanding our educational breadth and reach with the addition of ETF.com. Regarding innovation, this deal opens many doors for enhanced innovation at the CBOE. The addition of BATS global ETF listing and trading venues enables us to shape every aspect of product development and trading cycle. We can now design new indexes, list and trade them, and generate packaged market data to create additional products. We have expanded and reconfigured our R&D area comprehensively to explore opportunities for increased innovation. Our new multi-asset solutions division, which combines product development, market research, and information solutions, was structured to apply CBOE's product innovation expertise to a much broader array of products and services. This integrated approach positions the CBOE team to innovate across product lines and geographies and to collaborate with market participants, such as index providers and customers, and new partners, such as ETP issuers. Streamlined technology. Migrating our trading technology onto BATS' proven platform underpins the efficiency we expect to gain from Cboe's BATS combination. We're laser focused on working closely with customers to ensure a seamless transition and technical and operational integration. On March 29th, we hosted the first in a series of customer conference calls on technology integration and the migration of Cboe's exchanges onto the BATS platform, beginning with CFE's migration, which we expect to complete in February of 2018, followed by C2 and then CBOE. Related, last week we announced the expected October launch of a new complex order book functionality on EDGX Options Exchange. The aim is simple, to create what will become the world's leading electric complex order book. The EDGX COB will include the most comprehensive order handling, risk management, and trade-through protections yet. Options markets, that brings me to our options markets. With BATS, CBOE now has 4 options exchanges: Cboe, C2, EDGX, and BZX. And the market models are quite different. By providing 4 different exchanges with unique market models, trading ecosystems, and pricing structures, we are providing customers greater choice when it comes to their trading needs. We're currently looking at all offerings on our 4 options exchanges and identifying potential redundancies with the goal of unique offering on each exchange. We're also examining expanded products and service offerings to identify new competitive opportunities. Regarding our extended trading hours session, we've seen a significant uptick in client demand recently from our European customer demographic, specifically hedge funds. With that in mind, it's bringing a liquidity component to the equation with the addition of 2 major global banks that are now committing capital to this session, along with our lit markets provided by our market makers. We are seeing a significant uptick in average daily volume in this session. We're very proud of that over the past 2 years since we've launched. In conclusion, given the benefits we anticipate as a result of our combination with BATS, we are even more enthusiastic about Cboe's leadership in providing global investors cutting-edge trading and investment solution. In closing, Cboe is energized about the future as we look to continue to grow options and volatility trading. Through our extended reach, We remain committed to expanding investor education and trading resources that build awareness, broaden the appeal, and make it easier to trade options. Thank you for your time this afternoon. And with that, I'll introduce Joe Bracco from MIAX.
Thanks, Bill. Good afternoon, everyone. I'd also like to thank the folks at NYSE and OIC for hosting and selecting this great location. Again, I'm Joe Bracco, and I'm happy to be here representing MIAX Options and proud to update you all on what has been a very busy and exciting year for the Miami Exchange Group. When I gave this update last year, I referenced three words: performance, execution, and reliability. Performance, execution, and reliability, three words critical when describing the MIAX family of exchanges, and three words that help serve to create the acronym for MIAX Pearl, our second options exchange that commenced trading on February 6th of this year. The approval and launch of Pearl marked another significant milestone highlighting the growth and progress that everyone at MIAX continually strives for. From filing the Form 1 in August of last year, through approval in December and launch in February, Pearl from start to finish was a noteworthy accomplishment and one we're all very proud of. The Pearl model is maker-taker pricing and price-time allocation, leveraging MIAX's existing world-class technology, customer service, and risk tools, which are the foundation for the MIAX Options Pro Rata Exchange. Our motivation behind Pearl was to meet the changing needs of the industry as more volume shifts to make maker-taker exchanges and away from traditional pro rata and floor-based models. As an exchange operator, offering alternative platforms under one roof provides the industry with greater flexibility in choosing a model that best suits their trading needs. In the 3 months since launch, Pearl has shown early promise. We've launched with 37 members permissioned and certified for trading on day one, and have experienced strong market share gains out of the gate. But we do realize we have a long way to go with Pearl, and we're committed to working hard to innovate, drive efficiencies, and create opportunities for members and firms looking at becoming members. The addition of Pearl, alongside the MIAX Complex Order Book, which I'll touch on shortly, means through listings, MIAX members can now reach 99% of the U.S. options market. We continue to add new symbols and are about halfway to the 2,700 symbols listed on MIAX today. Given the breadth of available symbols, we're now positioning to execute on an aggressive strategy of competitive pricing and market quality incentives that will help forge a path to meaningful market share growth. It's important to note that all MIAX technology has been built for the unique demands of options trading. Why is this important? It means the ultra-low latency, high throughput execution capabilities of our system allow for Pearl members to have the same reliable and deterministic experience as they do on MIAX options. We realize the importance of determinism on a model where low latency performance and protections are critical to its participants. When we launched Pearl, we had a fairness and simplicity in mind. And in that vein, offer latency equalized access in the NY4 data center, providing firms with the option to use existing MIAX options cross-connects to connect to Pearl. This cable equalization across both MIAX platforms was part of a broader relocation of the MIAX disaster recovery platform from its location in Philadelphia to the Cermak data center in Chicago that was completed last fall. In keeping with the theme of simplicity and fairness, the Pearl model provides for an environment where all Pearl members have the ability to access the trading infrastructure on the same level playing field. Simply, market makers and all other electronic exchange members have the ability to submit orders, single or bulk, in a binary message format. The Pearl platform was intentionally built utilizing similar APIs and protocols as MIAX options in an effort to minimize the complexity of connecting for prospective members. For May, we announced a new pricing incentive to help Pearl market makers that trade a limited universe of securities achieve better tier economics through using their activity in SPY in order to trigger better overall economics on all of their market-making activity. So now, market makers on Pearl that trade an average of 2% of TCV in SPY have the ability to achieve Tier 3 economics on all of their market-making activity across all symbols. We did this at the same time as increasing the Tier 3 posting incentives to a rebate of 47 cents a contract. So with the expansion of the Tier 3 economics, small to medium-sized market makers can now get a 47-cent rebate for hitting either 50 basis points of overall TCV or by reaching the 2% threshold in SPY. Pearl also continues to run with a suspension of most non-transaction fees, so membership, application, market data fees are all waived. Taking a look back at 2016, in October we launched the MIAX Complex Order Book. This came after many months of working closely with MIAX members to ensure that we met same expectations around protections and efficiencies as on the MIAX Simple Book. But our work there isn't done yet. In the past few months, we've completed the symbol rollout to all symbols and have just recently completed adding a list of order types that include market orders, GTCs, IOCs, and day limit orders. We're also working to file with the Commission our rules for C Prime, which is our complex price improvement auction mechanism. Technical specs and user's manual for C Prime will be available soon on the new MIAX website. The planned timing for launching Complex Prime will be sometime midsummer, followed by stock tied and derived orders later this year. Increasingly, we're working hard to create a better member experience alongside the trading environment, whether it's our newly redesigned website or our evolving member portal that provides firms with the tools needed to search trade data and revise post-trade clearing and allocation instructions. Our mission at MIAX is to provide a complete and competitive offering. At a high level, we continue to explore new opportunities to provide technology solutions and services to a global community. Working closely with members and strategic partners helps us find a way that we can use our expertise and experience in building vibrant liquid marketplaces in an effort to bring liquidity to local markets. This past December, MIAX formed a strategic partnership with and made an investment in LedgerX Holdings. LedgerX is a privately held company working on becoming the first US-based CFTC-approved derivatives clearing organization and CEF for options based on digital currency. This unique partnership gives MIAX the exclusive global rights to list cash-settled LedgerX Bitcoin options on the MIAX and Pearl exchanges, an opportunity that both MIAX and LedgerX are very excited to explore. In closing, everyone at MIAX is excited about the prospects to grow our business at every level in an effort to drive efficiencies, create new products, and provide an experience that makes all of you want to choose the MIAX exchanges as your primary trading destinations. Many of the folks here already know Shelley and I, and it's always great catching up. I would like to point out there are a number of other MIAX folks here at OIC, including Amy Neely and Tom Kennelly, who head up our trading operations teams. We encourage you to spend some time with them and take advantage of their expertise regarding the MIAX systems and architecture. Look for them around or ask Shelley or I to make an intro, and we'd be happy to do that. Thank you again to OIC and NYSE for hosting, and enjoy the rest of the conference. Now it's my pleasure to introduce Tanya Patwa from Nasdaq.
Thank you, Joe. And thank you to our host NYSE and the OIC for the opportunity to present Nasdaq's 2017 Options Update. I'm Tanya Patwa, and I'm a Managing Director on Nasdaq's U.S. Options team. I joined Nasdaq last December, coming over from spot trading, where I spent many years trading volatility. While I miss AOL Instant Messenger dearly, I could not be more excited to be part of an exchange, especially Nasdaq. This year, I have the distinct privilege of presenting 6 U.S. options exchanges, now including the newly rebranded Nasdaq ISE, GEMX, and MRX. As for the highlight of this year's update, Nasdaq's acquisition of ISE closed on June 30th of last year. At this year's OIC, we can even talk about it. Nasdaq was well suited for this acquisition, as we have a proven track record of leveraging our industry-leading and incredibly scalable ISEnet technology. Specifically, by adding ISE's best-in-class complex order functionality, renowned precise order entry and execution management platform, and immense customer focus, we've expanded our reach to a broader spectrum of clients. Nasdaq is committed to best-in-class offerings and systems, and that commitment was reflected in the decision to acquire ISE. When Nasdaq acquired ISE, our management team had 3 goals in mind. First, upon acquisition, a seamless integration of ISE's exchanges onto Nasdaq's INET platform. Secondly, during the integration, to ensure limited disruptions to our clients' businesses. And lastly, upon completion, to have diversified our offerings to serve the broadest range of customer needs through diverse market structures and pricing programs. We're well on our way to accomplishing these goals, and we're thrilled to announce that we completed the GEMX migration to INET a mere 9 months after the close of the ISE integration. ISE migration is set to begin on June 5th. With additional functionality and a larger client base, this process will be a heavier lift, but currently our timeline remains on track. We remain confident that we will have as successful of a migration process as we did with GEMX. Later this summer, MRX will complete the ISE integration. With 6 commonly designed yet uniquely positioned market models, the sum of the two companies has already become much greater than its parts. This is only in part evinced by our continued status as multi-list market share leader since 2010. In 2017, Nasdaq's combined market share has been north of 40%, and we closed Q1 with 42.5% of market share. While we are highly focused on the integration, our commitment to the U.S. options market was reflected in more ways than one this year. On April 3rd, our new PHLX floor went live. Options trading has driven the growth of the Philadelphia Exchange for the last 40 years. By investing in a new floor that will continue to provide state-of-the-art order handling, we are expressing our continued commitment to investing in our U.S. options business and in Philadelphia. I went down to Philly to see the floor last Friday, which is now on the 8th floor of our new building, and I will say what the traders are most excited about is the ability to see outside for the first time in 40 years. As I've expressed this afternoon, this has been a big year for us at Nasdaq. But I'd now like to take a moment to talk about the true highlight of our year, our clients' resolute support and unwavering commitment to us. As we began this new chapter of our business, we knew there was only one way to get this right: constant communication. The more we engage with our clients, the easier it is to determine what we need to do. You communicated, you committed to our delivery, and you stuck by us. This year especially, your partnership, support, and commitment have been absolutely invaluable. For that, we at Nasdaq would like to sincerely extend our gratitude. Thank you. We also look forward to hosting you at next year's OIC. And with that, I would now like to introduce Mark Krommenhoek from the New York Stock Exchange.
Thank you. Thank you for the opportunity to update you on the exciting things happening at NYSE Options. 2017 marks the 225th anniversary of the NYSE and the 35th anniversary of the conference, of course. To put this all in perspective, we in the option world are part of a fairly young and young industry looking optimistically towards the future. Last year at OIC, what did we promise and how did we do? Well, let's take a look. Our technology team upgraded our matching engine hardware, which has resulted in average latencies being cut by over 50% and 99 percentile latencies being cut by 90%. We've deployed enhanced risk control functionality for orders and quotes and have successfully implemented all formerly mandated OCC risk controls. Additionally, we've enhanced our market data feeds to include customer interest at all price levels. We implemented additional quoting features to prevent locking and crossing of away markets and introduced the light-only quote type, which prevents inbound quotes from trading with non-displayed liquidity. We created BOLD, Broadcast Order Liquidity Delivery Mechanism, on the Amex marketplace, which will be coming out in the next few weeks. BOLD designated orders that are marketable against the NBBO will be displayed or broadcast to provide step-up opportunities prior to routing, canceling, or posting on the consolidated book. Orders received on the opposite side of the BOLD designated order will be executed as they are received. BOLD is also a laundry detergent brand owned by Procter & Gamble, which is listed on the NYSE, but that's not important now. In future releases, we will also be rolling out price reasonability checks for complex orders, enhanced self-trade prevention for orders with quotes, and improvements to our dedicated takedown lanes, and much more. We are happy to hear that our customers are reporting significant improvements with the performance and experience across many aspects of our system, as well as improved latency and determinism that we promised. What else is going on at the exchange? Well, Jim Hyde continues to fulfill his pivotal customer-facing role and industry leadership role. Jim is the NYSE options rep to the Securities Traders Association, recently appointed to the board of STA, been a standing board member for years, now serves on behalf of you, our most important constituents, as the chairman of the STA Listed Options Committee. Jim is a passionate advocate for the options industry within NYSE, at the STA, and everywhere he goes. A little over a year ago, NYSE Options launched BIRDS as primary return derivatives with a per-contract fixed return amount of $100 cash. BIRDS provide a unique way for an investor to generate income with limited downside risk. We currently list BIRDS on all the most popular underlyings. We believe that this product has long-term viability to be an important retail product. Also on the innovation front, we at NYSE MX and NYSE ARCA are pleased to announce a new way to access our markets with the release of NYSE Options Imprint. Imprint leverages your preferred instant messaging application with our proprietary Yellow Jacket string recognition technology to send pair orders to our exchanges. It's this easy. Let's say your high-touch desk receives an IM with an order details from one of its customers. You click on the IM to turn it into a URL. You click on the URL to create a paired order window. Click on the paired order window to send an order to either a floor broker or directly to the matching engine. And oh yes, all these timestamps are proposed daily on your behalf by your record-keeping application. And with the consolidated audit trail looming, this could become compliance critical. We really believe that there is no better, cleaner, or more compliant method for firms to manage the communications with higher touch paired orders. Stop by our swanky lounge next door for more details. Speaking of CAT, we at NYSE Options are preparing for the first phase of CAT implementation in November. We encourage all market participants to develop at least a rudimentary understanding of the consolidated audit trail. As an aside, CATS was the fourth longest running show on Broadway behind Phantom of the Opera, Chicago, and Lion King. The CAT could rival Cats in popularity, or at least surpass my favorite Broadway show of all time, Mamma Mia. Please don't tweet that. As we look ahead, we are working to transition our options trading systems to the state-of-the-art Pillar platform, which we are currently using in our NYSE ARCA equity market. Pillar is a robust, scalable, and flexible trading system and is a cornerstone of the NYSE technology plan. The transition to Pillar for NYSE options is planned for 2018. Finally, as host exchange for this year's conference, I, Bill Ryan, and the entire NYSE Options team would like to take this opportunity to extend sincere thanks to the Options Industry Council, OCC, and all of our partners there, as well as Mary Savoy and Caroline Davis, who have been working tirelessly on your behalf to make this conference all it can be. Also, a shameless plug necessary for Jennifer Hopkins of Hopkins Consulting Group, who is the calming influence on all things Options Industry Conference. Many thanks for everybody for stewarding us through all phases of the conference. Have a great week. Thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.